Good morning, everybody. Welcome to the Flow Show. It's Synthetic Friday, I think we'll call it that, as it's a long weekend starting from tomorrow. At the moment, there's not going to be a Flow Show tomorrow or Monday, but unless something kicks off massively today, ECB or wherever, we might do a little sneaky one tomorrow, depending on what's happened. But if it's quiet, no Flow Show tomorrow or Bank Holiday Monday. Okay, got your shorts on, ready to hit the beach?
Can you hear me?
Yeah.
Okay. Good morning, everybody. Morning, Ryan. No, I've taken my net. I'm going to chase bunnies this weekend for Easter.
Okay, bunnies and hot cross
Hopefully
buns.
they're chocolate bunnies, but I wouldn't want to kill any live live ones.
Well, I don't know. They're good eating around here. A bit of
They
rabbit.
do.
Don't mind a bit of rabbit.
They are. Yeah, I wouldn't mind a bit.
Bit of rabbit stew. Oh, there we go. Get me all hungry again. Good. Lucky I'm on a diet at the
So
moment.
yesterday we did a gardening flow show. Today is like a cookery class. Welcome, people.
Yeah, hunting and cookery today. Yeah, gardening yesterday, hunting and cookery today. Next week we'll do DIY. How about that? Right, let's get cracking. Japan's government pension fund has apparently switched its foreign equities investment benchmark to exclude domestic Chinese shares. I think that was something that was in the pipeline already, wasn't it, Kay?
Yeah, it was. It was absolutely. It went under the radar a little bit, perhaps because of all this tariff violence everywhere. But yeah, it was. I went looking for it, and it was in the GPIF's statement that came out end of March, beginning of April. It was perhaps not 100% clear, translations and stuff, but seems like yesterday the main wires or some wires have picked up on that and found it interesting and needed to repeat. But it's obviously interesting if they've given their asset managers, because they use other people as well, instructions not to include the China A shares anymore in their current investment plans. We've just one thing around those investment plans, because they always make like longer term plans. For instance, this one is the basis for a 4-year plan, but every 6 months they revise that plan. Okay, they usually don't make any big tweaks to it, but we've got to know that every 6 months or so they are revising that.
Yeah, and that revision is more of probably a rebalance than anything else, isn't it? Because I think is it
Yeah,
every 5 years they change or they look at their remit. Is it 5 years or 4 years?
well, yeah. I mean, this one is 2025, 2029, but then is it 2029 fiscal year included? I'm not 100% sure. I thought it was like perhaps 4 years or so, but yeah, I mean, give and take. Yeah, but they do tweaks. They also have leeway, obviously. But if they exclude something, then there is obviously no leeway in how the balance of the portfolio can be shifted from time to time.
Yeah. The Ministry of Finance also reported that Japan sold foreign bonds last week. I don't know if I've not been keeping on top of their ins and outs of late. Is that a first or
No,
is that just
last week as well. It happened. So this is a second week where they sold, but it's a lot less than last week. This is the report that comes out for flows that have been done until last week Friday, if I'm correct. Where the CFTC reports are up to the Tuesday. This is what they did actually the week ending last week, basically. But the week before they did a big sale as well.
yeah? Could that be fiscal year stuff just going through rather than anything nefarious?
It could be part of those rebalancings. It could be the things that we have talked about, that when the JGB yields would hit certain levels, they may be interested to rebalance a little bit. And as a matter of fact, it's not. Well, it was tariff related, of course, that the Japanese 10-year yield collapsed, but I would not completely rule out a bit of rebalancing there. They will never. Oh well, they will never. Okay, that's something that we can't say in markets, but.
Oh, you've gone.
Yeah, I know. I mean, this issue starts again, and I don't know why. So they won't sell all their foreign bonds or so, or US bonds at one stage. Forget about that. They will still remain one of the main investors in the US, but they do have leeway, and that is what we may have seen, a bit of end of fiscal year, start of fiscal year, a bit of rebalancing of the books there. That is, I think, what happens here right now.
Cool. Economy Minister Akazawa says he urges swift and mutual trade solution in US talks. We had this meeting with Trump, or some of their trade counterparts, and Nishiba had conversations with Trump yesterday. Trump said things were going pretty well. If I find the exact comments, it's a great honour to have met with the Japanese delegation on trade, and big progress was made with the Japanese delegation. However, it's a bit of a different story this morning and overnight. As I said, the economy minister told his US counterparts that Japan wants the best solution as soon as possible for both nations, strongly requested a revocation of the tariffs on Japan, and have agreed to hold a second meeting this month. So they haven't actually come to any sort of conclusion or deals or in those negotiations. They're going to continue. One thing the market was looking for was comments on FX, but they didn't comment or discuss those at the time. That saw a bit of a reversal in dollar yen to what we saw last night, which looked like it was breaking through the 142, 141.70 area. Finance Minister Kato says he is deeply concerned US tariffs could affect Japan and global economies through various channels such as trades and markets. Bank of Japan's Nakagawa says rate hikes to continue if economic and price outlooks are realised. That's speaking off the script. The main man, Ueda, was speaking at length in Parliament yesterday too, and he's back on the script, saying Japan's economy is recovering moderately. We'll scrutinise the outlook at each meeting. Economy and prices are roughly in line with the BOJ forecasts, but heightened uncertainty remains. It says the financial system is stable and real interest rates remain very low. Then the old line, BOJ is expected to keep raising rates if the economy and prices follow their quarterly outlook. Then he added the January rate hike came as the US economy was solid and markets stable, which infers that right now the US economy isn't solid and markets aren't stable. Kay's walked all around the houses again. Nothing on offer really from him. They're going to keep going, but who knows?
Well, he
No, you're gone. You there, mate?
what happens here, but seem to have like micro cuts, Ryan, on for my internet. So excuse me, sorry everybody if I drop away at times. Yes, Ueda redone the whole thing, walked all sides of the aisle. Couldn't really make out exactly what he meant in the end, although it does seem to be back on script. Interesting is that Nakagawa, he was probably a bit more cautious. That is to note, perhaps, although.
No, you've dropped off again, mate.
Yeah, I'm very sorry. I really don't know what's happening. I'm going to have to check it again. Yeah, but the interesting one is that I think if we go back onto the trade talks, is that Akazawa, he did say afterwards, even though FX wasn't brought up, saying that Japan is not really weakening the yen, and the fundamentals have to do their thing. So that is some line that Japan has always kept, and which is the one that I was kind of looking for. Now let's see what they say during official talks with Besant. But that would be one where I would say like be a bit careful with long yen positions, because if Japan is not going Trump's or Besant's way to let the yen or allow the yen, or not allow they will always, but to force the yen stronger, we could have a little bit of a setback in the end there.
Yeah, thanks, mate. I mean, one of the reasons I had a little dabble short yesterday in dollar yen was because these upcoming conversations. I thought they might have yielded something a bit more positive, but we're right back where we started anyway. Got the move that I wanted anyway, but yeah, we're back where we are around this 143 area. We've also had the fourth round of the Rengo wage tally. That's coming in at 5.37%. So that's staying roughly where it was at the start. It's been ticking around 5.38, 5.4. So that's all well and good. No real decrease there to the initial wage deals. The market pretty much knows what it's getting now from that. But we'll see if we get any further items from small businesses and the likes moving forward. But that seems to be the numbers we've got at the moment. We also had a bit of data out from Kiwiland and also Australia. We start in Kiwiland with CPI, some quarterly and year-on-year numbers there for Q1. CPI on the quarter coming in up higher, 0.9%, was expected to rise 0.8 from 0.5, so a pip higher there. Excuse me. The year-on-year number for the quarter also higher, 2.5% versus 2.3 expected and 2.2. They have a couple of other measures as well. They're tradable and non-tradables. Both were higher in those numbers as well. Any thing there for the RBNZ to get stuck into? They've lost another member as well, the Deputy Governor Robbers. Interesting name for working at a bank.
Yes.
Resigned last night, maybe for the best, I don't know. But RBNZ, any thoughts on those guys?
Yeah, because they were kind of expected to continue cutting, but after the statement that they gave last time, and with these kind of numbers, I would rather think that they may be on hold for the next meeting if we confirm no disaster, obviously, blah blah blah. But we know with everything we say and expect, we need to put disclaimers because the next headline could completely throw everything upside down. But yeah, that is it is still within their range. Huh? That is one thing. It's still within their range, so there is no big issue there, but just ticking up, and it's Q1, so I don't know if they will have some advanced reading on the Q2 data, perhaps including some of the tariffs, because as we know, everybody is still paying 10% blanket tariffs, but yeah, that could just hold them from continuing to cut aggressively.
Yeah, absolutely. Moving on to the RBA Australia, their jobs data out as well, and overall a solid looking set of numbers. Was a slight miss on expectations, but it turned around the negative numbers from last month to a positive. The revolving door was both positive, part-time and full-time, showing increases. The unemployment rate came in at 4.1%, but that was against a revised 4%. The prior was 4.1%, was estimated at 4.2%. So all around about the houses there. The participation rate ticked up a bit, although the prior was revised down a bit. So overall, nothing bad from there. They've still got a fairly solid jobs market, which has been one of the reasons why they've been so reluctant to cut or feel the need to cut. Although we did have that potential story that they may be looking at May as their next point of when they think about rates, according to their last minutes. Coming back to, excuse me, the US data from yesterday. Start off with retail sales. And again, we're in a bit of a situation where we're seeing a lot of weakness coming in a lot of the private and survey data, but it's not yet really impacting the hard data. Retail sales came in a healthy headline 1.4%, slightly above expectations. However, core sales, they sort of, there's two lots of core sales this calendar has. This is the main one, retail control. So that's a core one that came in a little softer than expected. That was a positive. Even that other one was a bit softer than last month, but still a positive. So we're not seeing any big signs in the hard data that the US economy is rolling over. But as is the case with this private survey data, sentiment data, it is ahead of the hard numbers usually. So it can take some time to filter through, if it's going to filter through. And that's what the market's going to be looking at now. It sees soft survey and sentiment data. It doesn't see soft hard data yet. If we get that change, then we're probably in for another leg lower in things like the dollar and a ramp up in yields. So that's the game we're playing at the moment. We also had the call it the Empire Services number coming up. I'm not sure it's on this calendar. If I can see it, if I don't go a bit blind, is it in there? No, can't see it. Well, that came in anyway at minus 19.8 versus minus 19.3 prior. So services index there coming a little bit softer. Did have a bit of housing from the NAHB. That housing market index rose to 40 from prior 39. Also, business inventories coming in too a little later. And I've been thinking this number might have been coming in a bit hotter if there's been a lot of front running, but only a 0.2% gain for now. But it has ticked up a bit for the month on month, so we could still be seeing a bit of an inventory build there. Industrial production numbers out as well, a bit softer than expected on the month, a bit lower on the year. Capacity utilization dropping back a little bit. So again, maybe some signs of a little bit of weakness, but we're not talking outright collapses on anything at the moment. Bank of Canada, they left rates unchanged, 2.75%, as sort of expected. There were some people still looking for a cut. They basically threw their forecasts in a big cement mixer and said we'll pull them out sometime down the future, because they didn't actually provide any full economic forecasts in their monetary policy report, citing the uncertainty generated by US tariffs. What they did do, though, was release two possible scenarios. The first one thinks that most tariffs are being negotiated away, and the second scenario sees a long-lasting global trade war. And in that first scenario, they think that Canada and global growth will weaken temporarily, and that Canadian inflation will fall to 1.5% for a year, then return to 2%. In the second scenario, they see a sharp global slowdown and increase in inflation numbers. They reckon that Canada will enter a significant recession and inflation will rise above 3% in mid-2026 before returning to 2%. They say that in both scenarios, the nominal neutral interest rate is estimated to be in the midpoint of a 2.25 to 3.25 range. Then they also added on their get out clause, saying that many other scenarios are possible. Macklem, he said that they are prepared to act decisively if information points clearly in one direction. It says economic growth and inflation forecasts are as little use as a guide to anything. We're just as worried by inflation being above 2% versus being below 2%. If the tariff situation becomes clearer, we can go back to having base case projections. So the Governing Council considered holding rates or another 25 pip cut. So nothing really at all for trading the loonie on that lot. But as we mentioned going into the meeting, the interest is in how they are assessing this tariff front. Long story short, forecasts aren't worth the paper they're written on for the foreseeable future, and the best they can do is guess either side of the good, bad, and the ugly. This is probably going to be a blueprint for every other central bank moving forward, and I expect the same at the ECB today. Kay, that's it for the next 6 months. Forget about central banks.
Yeah, I mean it's all yeah, as you say. I mean it's probably all going to be the same line. I mean even sorry, excuse me. Even Powell last night, although he was perhaps a bit more hawkish than he may have sounded, but it's probably going to be the same line, right? I mean, we don't know what's going to happen. We're going to monitor inflation. We're going to monitor the economy, the growth, employment, etc., and then we will act. The thing with McClem is really, or with the Bank of Canada, it's really, as you said, it can go any way. It reminded me of those expected neutral rate projections for the ECB. It could be 1.75, 2.25%, but we could have a 2 to 3% margin, error margin. I mean, it's really flip the coin. They will have to wait. And as you say, I mean, I think our preview for ECB is already done. They likely cut a quarter and then go on. We will see what happens now. The interesting thing overall, and then I heard what Rogers said yesterday, and also what other central banks were saying, and UADA, by the way, said it the day before as well, and most of them are now on this kind of line, is that, and Powell actually confirmed it too. Volatile markets, yes. Do we see rapid moves? Yes. Is it dysfunctional? No. So, and
Yeah.
that's where they are all at now. They, I mean, in one word, central banks won't bail out the market for as long as the market doesn't become dysfunctional, or we see right out of kilter moves that shouldn't happen. I mean, think about the bond market imploding, or the equity markets imploding, those kind of things. But they are all on the same line now, and we've heard it from the main central banks that the markets are volatile but not dysfunctional. And that is, I think, for us also interesting to hear, and to hear that, and to accept that as well. So volatility, yes, because they don't know, we don't know, as we have been talking about it so often, what the next step will be in tariffs. Everything seems to go a little smoother than the worst may have been expected, but we never know with the Trump administration, right? Because there's a lot of hawks, to start with Trump himself, but there's a lot of hawks around him as well. So, and they are all at the same point as well. So there is no immediate. I'm sure they are making their homework, and say like, what can we do if markets go ballistic? But there is no immediate need for them to step in. So that is, I think, interesting enough in itself.
Yeah, absolutely. It's something we spoke about a couple of weeks ago as well. Whenever you get big market moves like this, volatile moves, there's always people who come out and go, "Oh, when are the Fed going to step in? When are the central banks going to step in?" And that itself can create trading moves as well, because if you understand how central banks work, unless there is financial instability, they're not just going to jump in on volatility, as Kay says. But even that fear and expectation can move markets. But as I say, that can become a bit of a fade opportunity. Onto the Fed heads. Fed's hammock says strong case for holding monetary policy steady to balance the risks. Would rather be slow and move in the right direction than move quickly in the wrong direction. Fed Schmidt said there's a lot of nervousness in the agricultural sector due to tariffs. As Kay mentioned, Powell was up and about. He said we're well positioned to wait for greater clarity. Could find ourselves in a scenario where our mandates are in tension. He's also blown out the expectations again for PCE. He says that the estimates show PCE rose 2.3% in March and the core was up 2.6%, which is slightly at odds with Waller. I think it was Waller yesterday who said he expects core at 2.7%. So anyway, we've got a baseline. That's what that's coming in the next data. He's tipped the nod 3 times now, or will be 3 times if he's right on this one, which makes things a bit boring. It says the economic impact of tariffs are likely to be larger than expected. So that is a bit of a hint as to how they viewed things previously compared to now. Something we'll probably have to deal with at the next FOMC. He said the effects of trade policy is likely to move the Fed away from its goals. It says we'll be moving away from goals for the balance of this year, and perhaps that can resume next year. Again, that seems, Kay, like a little bit of a hint that they're going to go into Bank of Canada mode. We don't know what's happening for the next year, so don't think we're going to be doing anything, sort of thing.
Yes. I think central banks now, as I said, they are looking at all those different scenarios, but and I think ready and ready also to change their view. Because everything they say now has this little hint of, I mean, this is where we are now, and everything is like up in the air. But we could also react faster than we are expecting right now. So, as you say, I mean, really all up in the air, mate.
Yeah, Eddie's saying Powell was hawkish yesterday. I didn't see anything hawkish from him. It certainly wasn't dovish, that's for sure. I would say in this situation, when you're talking about what's happening in the economy, it's a question of not hawkish or dovish, but whether he's bullish or bearish. And he wasn't either, particularly in that. He did add, though, that the growth in the supply of workers has stagnated, so has demand for workers, and that's keeping unemployment relatively stable. And then another thing that's popped up recently, obviously, with all these dollar moves and everyone thinking that the dollar's a dead currency and blah, blah, blah. And we had this discussion in our chat room yesterday with one of our members talking about whether the Fed might consider stopping all their swap lines where they provide dollars to other central banks. Well, he put that firmly to bed by saying the Fed stands ready to continue to supply dollars to global central banks if there is a shortage. So he's put into bed some of these market rumours and ruminations that are happening.
I mean,
go on, mate.
Who would ever expect he is going to say, yes, we could stop swap lines in a market that we have now? I mean, it's complete madness to even expect him to talk about that. But no, I'm with you. It was well, especially it was not dovish, but there was nothing. People said that he was like hawkish, but I'm with you. I mean, he just said like, okay, I mean, it's not time yet or it's not time to do anything stupid because the markets are not dysfunctional. I mean, now and that is also pushed by all those fin twitters and everything. They for as soon as the market moves 50 pips, they are already there like, oh, we are going to have like emergency rate cuts and stuff. I mean, one of the reporters yesterday was also trying to force McClem to say something about potential emergency rate cuts in between meetings and things. And I'm actually glad that McClem, who sometimes can be a bit dovish or lost for control, I'm actually happy that he said like don't overdo or overthink. When I said that they stand ready to act, and no, I think we really have to remain both feet on the ground here.
Yeah, absolutely. Right, let's crunch through the rest of the headlines. United Airlines had their earnings out. Their CEO said that it's clear that a softer macroeconomic environment is driving both volatility in the market and softer demand for travel. So, again, some signs perhaps that there is going to be a little bit of a drop-off due to all this tariff stuff. But they said the international environment is strong for the airline and it looks good for Q2. China have still been playing up against Trump's threats. They said they will ignore the numbers gained by the US and repeated it will fight till the end if its interests are harmed. Coming over to this Ukraine stuff, just a little heads up again, keeping half an eye on it. We've still got this minerals deal ticking along, taking forever. The deputy PM in Ukraine said that on the minerals deal, talks with the US were seeing substantial progress. And the teams have agreed to sign a memorandum in the near future. But again, how long's a piece of string? Right, we've got the ECB coming up. Bank of America are expecting a 25 pip cut this week, but they say the April meeting is likely a non-event for the euro. Kay, do you remember the last time the ECB was an event for the euro?
Yeah. Okay. Yeah. Oh yes, we had some, but don't push me for dates. Okay.
No, go on. I need a date. I'm
Oh,
putting you on
come
the spot.
Oh, okay. Let's say I had a few more hairs then.
Right, so we've got Lagarde coming up, and here's a little preview for you. Something I decided to knock up on the old ChatGPT, because we're going to look out. This is about the only interest I have in ECB meetings these days: what she's wearing, and whether what colours are fake tan, and whether De Guindos is going to speak. So, what are the odds on that today, Kay? Are we going to get a word in? It's April now, and we haven't heard a word from him.
Well, I mean, being Easter, I wouldn't be surprised that he says happy bunny hunting. But more than that, she won't allow him to say.
Yeah, we'll have to get the old tan chart out. Right, I'll have to get the old tan chart out later as well. Right, so what are we expecting? We're expecting a cut, 25 pips. Before this tariff stuff kicked off, it was looking more like 50-50 that it might be a cut or a pause. I was at the beginning of the week still slightly siding with a chance of them going on pause, but this is the ECB, and they're always a dovish central bank, so a cut is probably likely. But I think the news is going to be what they see going forward. And that's what we're expecting. How are they going to react to this tariff stuff? Is it going to be in the same vein as the Bank of Canada? Lots of uncertainty. Don't know what's going to happen. It may cause us to go into a bit of a pause mode and forget forecasts for a period. Yeah, I really can't see where we're going to get the news from, Kay.
Well, no, I'm still siding with the, but it's really, yeah. Again, not a huge conviction, but I say cut 25 and pause until they know more, and that's I think where it is.
Without
much more I can't
committing
say.
themselves. Yeah, without committing to anything in particular.
No.
As for the euro, what could that do? Well, we've had a little pokey above 114, but that's held for the moment. Dips are still fairly shallow. We've got this similar price action to when we had this break up through to 110. You know, it's just not really going down, but it's not looking like it wants to go up just yet. Is the ECB going to be a decider for this one? I think you're going to have to watch what the dollar does going into the meeting, okay? Because we could have a situation where euro dollar just doesn't commit to a side. But if the dollar's moving in other pairs, what that likely means is that euro dollar traders are just waiting to get through the statement and the press conference. And if there's no shocks from that, it will likely play catch up with what the dollar's doing elsewhere, if the dollar is generally moving elsewhere. So that's really how I'm going to be looking at it. I'm certainly not picking a side based on what may happen at the meeting. Obviously, it would be a bit of a shock if they go on pause. So that is still a slim possibility. In that case, then we're probably going to see euro rallying a bit on that. But whether we can get up to that 115 level that I'm keeping my beady eye on is another question. So yeah, going to be a reactive one to this one, I think. I'll leave you to look at euro sterling. I'm just going to have a quick look at dollar CAD. That's still mooching around one of my levels down here, 38.60.70. We had another little pokey under yesterday. Can't get through 50s, so that's a little safety net going on there before we look at some of these lows. But we're holding the level now. Rallies at the moment are looking very weak, but this is potentially just going to do a bit of ping pong between the levels unless we get some big news going on. And as I say, follow the dollar for where this goes. Dollar yen, as mentioned, we got down to this big level, and it is quite a big level. We've been down here before, we've traded around it before. And we were speaking about volatility in markets and how you need to adjust. And that was perfectly evident yesterday. 41.70, 75 is the level. I know Kay's got it as well. Okay, but we still went through it 3 times, even by 8-9 pips. It doesn't matter. It just shows you that you can't rely on one level. Okay, one number. You've got to account for little extensions, little blow throughs. The volatility adding to that. So if you want to be trading stuff like that, you've got to, set yourself a little bit wider. Ali, you've explained it as well. What's going on with dollar yen? You get these little moves; they go through your levels. If you find that's happening a lot, adjust your levels, adjust your risk, adjust your sizes, maybe go a bit wider. So anyway, we've bounced back to 143, a little move through, but we're running into trouble there. I expect to see a bit more coming up to 40.50, then 144. Obviously, the big level above is that 145, that old level. If we do start moving through this again, then maybe we're heading lower. And again, my big levels below are down at the fib, and then the 138 below. But maybe a bit of sideways action going on here. Right, Mr. Kay, I'm going to punch it over to you for a few.
Yeah, if I'm not mistaken, yesterday we had Frederick on asking about the South Africa bourses, but I don't see him online. Frederick, could you just give us a shout or put it on the chat if you're online? Because if you're not online, obviously it's not really very useful that I'm starting to look at stuff. But I did not massively, but I did a little bit of research on it, and as to the whys, we it may have happened what we saw. But if you're online, just put it on the chat and I'll have a look at it. If not, then we'll do it another day when you're on, because obviously there's a bit of other stuff moving. So we've seen this move here in gold. We ran a bit shy this time. We had a spike there up to close to 33.60, your daily move, I would say, on gold. But we're coming back a little bit. Those are exactly those kind of moves. Okay, this was a bigger one, but that we've seen so many times, coming back a little bit and then stabilizing and then doing the next leg higher. Now, and that's going to reply your question. Today I decided to at least my bias is completely unchanged. This thing is still ultra beat, but or ultra bullish, I should say, for as long as we are above those kind of levels here or here. But it's the Easter weekend. For once, I wouldn't rule out to see a bit of ahead of this long Easter weekend, a little bit of consolidation, maybe people taking a little bit of chips off. There are going to be markets not fully open. Liquidity is going to be less. Obviously, that liquidity works both ways. We could have like a move straight up into the 3400s as well. But I've decided to now finally take some profits and go into a more of a wait and see attitude. There's no reason for it really to come down massively, but to only would it be for positioning. So I would say perhaps already around 3300, have a look at what's happening. But here, this is the one that I'm going to monitor. If over the Easter weekend we do see a bit of retracement and we hold those 32.5, that would be enough to say that it's still monster beat, and that would probably mean that next week we're just going to move above the next step, I would say. Oh yeah, Dow just dropping. I don't know. Maybe we've had a headline there also.
United Health, I think their
Oh,
shares are down
okay.
11%.
Yeah.
They cut their profit
Oh,
outlook for the year.
okay. Thank you, Ryan. Right. Oh, what is this? Oh no, okay. Um, okay, so that's it on gold. Now, for the moment, I'm going to be a little bit on pulse here. Okay, I'm going to have a look at what's happening in the cable, because it's interesting. Yesterday we rejected that 132.90 figure. You know, I've showed you this longer term trend line coming in from the 142s over the prior high 134 and a half. That line is at 133, the figure, and we did stop there again. Okay, so that's already an interesting one that we need to pay attention to. So for as long as it doesn't really break, we could be like kind of hovering around here a little bit, or reject it and collapse. But I'm not sure that this is how the dollar is behaving right now. And then we're going on onto the shorter term chart. The prior high has showed up as a support. So that's already your interesting intraday little range that we will be watching. I would say if we get like the similar kind of thing, like a bit of consolidation into Easter and et cetera, we may see eventually or potentially a move back down to 131 and a half. But unless something happens that underpins the dollar strongly, with that here should hold. It could already be around 132 figure 10, you know. But this is just a prior high. This is just a retest that we had overnight. So don't really make that your biggest level yet that there is on the cable. But it is interesting, nevertheless, that it's already holding there. Okay. That for the cable, euro sterling, kind of, kind of as expected, I would say. We've seen this move, and I said it in our room as well. There is a potential. I was short in this move here. I was a bit short here, and I took my profits yesterday a bit above the level, as I usually do when I see like a decent level showing up. I do um, tend to cover a little earlier also, and let the rest to the algos unless we break down, and really think it's going to break down. But the support 85, 10, 20 showed up, and we moved back up. And interestingly, it stopped in the 86 figure 20. So that is already good enough for me right now. For as long as these caps, we could be in still a bit of a move. We could be building a range here. That's actually looking into the longer Easter weekend. I wouldn't be surprised if we are ranging now, and then take a fresh direction when we come out of the weekend, unless obviously with everything that we say now, the big disclaimer, unless something happens on tariff of or global trader. But yeah, I wouldn't be surprised that we now try to form a range here between 80, call it 85, 86, 20. That would be uh relatively logic. Also bear in mind, obviously today we have ECB. So if we would see something out of the ordinary, we don't know what to do, or a hold, and Lagarde is saying for the time being, nothing is worrying me, then of course this thing is probably going to go for a walk like all the euros, right? But this is not our base case right now. So I would say that there is a fair chance that we are range trading a little bit here. Just a couple more, and then I think it's good enough for this Thursday again. Aussie, 1, 2, 3, and we didn't reach the 64. Again, it's rejecting up there. So this remains, and I'm by no means saying that it can't break, okay? But this remains the big level. 63.90, 64.10, 15. for as long as it doesn't break the Aussie, we need to absolutely respect this level, and it has done it once more. Okay, so this now is getting to be a very big level, which also means that the day, or if we break, this can go for a bit of a run. Okay, so keep that level really on the fore of your mind. Again, same as for the rest, we could be in a bit of a range forming formation here, and I think, if I don't know about those levels, I think 63.30, a little bit in the middle of the park. If we would go back below, there's a possibility that this goes back to 62.70 and then range. The Kiwi is still the better one of the two. The Kiwi is still trying, and actually relatively successfully, um, defending the break of the channel. Okay, so this is still looking more positive. 58.90 figure, and we are around the 50% of trading bang on it right now. The 50% of this whole move lower that we saw between September of last year and earlier this month, it is looking better still. Okay, so for those trading Kiwi, I would not be short unless we break back below 58.85 figure. And as Ryan was saying earlier, always give a few algo pips to any level right now. But if it breaks, let's say 58.80, the party may be over for now, and we are back into this to this channel. And I don't know if we want to be optimistic or not that Euro Swiss is holding around 92. We still are all of us a bit long trying to find the bottom here, but I mean, don't get married to DID, because we saw a bit of a move here above 93, the figure this morning, and it's coming back down. I think this is pre-ECB stuff. Let's revisit that after the ECB is done, or when you do your homework on everything Swiss. The big support line in dollar Swiss still holding, but we are not moving miles away of it. We are still only around here, 81.70 trading. So this is still very much in danger, this 81.10, 81.45 on the dollar Swiss. So keep watching this very closely, because a break could be a bit damaging for all things short Swiss. The short Swiss won't work very well if this breaks. And on that note, Ryan, back over to you. If we don't speak tomorrow, happy bunny hunting, and we'll talk to each other next week then.
Yeah, thanks very much, Kay. Great stuff as always. Just to remind you before we go into the weekend, if you haven't taken advantage of our sale, our Liberation offer, 40% discount on monthly subscriptions. Get it while it's hot. It won't be around for too long. On that note, we will wish you all a good long weekend. If you're partaking, as Kay says, don't eat too many bunnies or chocolate or anything else. Trade safe, trade well through the ECB, and we will catch you all next week. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.